Hi, my name is Steve Ruffley, owner of TraderMaker.com. I'm here today to introduce our official Metastock add-on, TraderMaker PRO. In this video, I'm going to show you how my add-on enhances Metastock so you can get your own professional layout, indicators and alerts, all the things that are going to make your trading decisions more informed. For me, this add-on is designed to enhance your trading experience. It's like having your own trader and risk manager alongside you while you make your own trading calls. If you need some credibility, I'm the Chief Market Strategist of Intertrade.com. My analysis features regularly on Bloomberg and Reuters. I've again been a trader for over a decade, I've been a risk manager at Revco, and I've also managed the biggest trading floor in Europe at Schneider's in London. I'm now going to go through how you can set up your charts and how you can use my add-on in the best way. It should be pretty self-explanatory, and by the end of it you should understand why my add-on is going to bring real depth and real quality to the trade calls that you make. Okay, let's get started. So the first thing we want to do is open up our layouts. So that's just found in File, Open, and we have our layouts already. So we have different types of layouts for different types of trading, but we're going to concentrate on the system now, so just look at a single product and commentary. Okay, so the first thing you want to do when you open your chart up is View, Expert Commentary, and that gives you the TraderMaker add-on screen. Okay, so this is all the information that you need to know about what the market is thinking right now. Everything outside the charts I class as what the market knows and is looking at. Everything inside the charts, these bull, bear and reversal signals and indicators, are what I think the market's going to do. Okay, so you get a lot of good quality information off a daily chart. So that's what I always start to look at. Now you can zoom out and go to the weeklies and the monthlies, but again you've already got that information on the charts already in the sentiment. Okay, what I would like to do first of all is see what's happening in today's trading and what the key levels are, and then use that on the smaller time frames, zoom in to understand how I can trade and make some money. So what I've just done is I've put some of these key levels that the market's telling me into the chart right now. So the support and resistance lines, okay, are all here for you to see. Now the support lines all marry up. So this is this line here. This is key support on the daily chart in silver. Okay, so the market really wants to hit back down to here if we're going to see more bulls than bears. Okay, now the support lines, okay, are all here, and that's and the resistance lines. These are two different sets. So that means there are two major kind of resistance lines as the market's extending up. So they're indicated again by the blue line. So we've hit one particular level of resistance and then one above it, but what we've got on the dailies is my indicators kicking in saying we've got a reversal, and the market's already started to test down. Okay, so when we see the arrows and the candles turn blue, that means there's a new type of market condition, and that's what I call an overextended market. Now when you see an overextended market, the best way I like to trade that is with Fibonacci. Okay, so the market's overextended. That means it's breaking Bollinger Band, it's hitting the RSI, it's overextending quickly in one direction, so we'll be getting short out of the market. Okay, but when this happens, the market, in my experience, will generally look to retrace, and it will look to hit key Fibonacci levels. So, key Fibonacci levels, the first one is the 50%. 80% of the time, an overextended move will retrace to 50%. Now that generally applies to very quick moves. So now we're looking on the daily charts. It's obviously still very, very important, but it might take a little longer to come into play. Okay, but we can see that already when this daily silver candle has opened, it's broken through the key resistance up here and the 50%. So it's looked to move down, and what does it look to hit? Well, I mean, you've got the 100% retracement, obviously, is another good point, but I like the 161.8. So the market really has just missed out testing the 161.8 Fibonacci retracement level, earlier on today. Okay, so the market does break through. The next logical point will be overall support. Unlikely it's going to get that far in a day, or the overextension of 261.8, which is indicated by the green line here. Okay, so you're getting all this great information just off the daily chart. You can see the market was very, very bullish. We went red for a little amount of time, but we're still showing the bullish sentiment on this daily chart. So the market is still looking to buy. Okay, but you've got your fib levels, your support and resistance, and my indicators telling we're at the end of a bull run on the dailies, and the market's likely to reverse. So we want to trade from this. We want to go into a smaller time frame and see what the levels on the hourly charts, or what my indicators running on the hourly charts are going to tell us. See if we can actually make some money out of this. So very easily we just select the hourly time frame. Okay, so you just want to rescale the y-axis to get a better view. So we can see on the hourly chart, we're saying that in the smaller time frames, in the hours, a bear sentiment has come into this candle here, pushing through resistance here, and actually closing below the 50% Fibonacci level. And that means that every time the market fails to test higher and carry on this bull move, this bearish sentiment set on the hourlies will continue. So we finally run out of momentum. The market closes on that 50%, no coincidence. Market sells off, doesn't quite get to the Fibonacci overextension here, but it doesn't get too far away. So that's still a very, very good 1, 2, 3, 4 hourly sell-off. So you've got plenty of opportunities to make profit. When we fail to test and break below the Fibonacci level here and get to the next one, or overall support, obviously the market then returns. The next logical place it wants to hit is that 50% and that key resistance level up here. That's on the dailies. So you can sell into that weakness. Once it's rejected, buy back into the strength. That's two opportunities just by using these support and resistance levels, a couple of fib levels on the daily charts, and then just looking at your hourly charts. So what's going to happen from now is the same scenario. The markets, we can wait for new signals to print, like the bull and the bear or the reversal, but we know from the dailies we're in a reversal here. We know there's more bears in the market here, so we look for the same opportunity. A close below key resistance and the 50%. If that happens, then the market wants to hit back to this 161.8 Fibonacci, maybe the lower one, and again get back into the general range of this particular up move. Okay, so again, that's just an easy way of using this particular system, and that's just on a quick example of silver, of what's happening today, by using all the indicators I have, okay, at your disposal. So you can tie in your own key levels that you see the market returning yourself, or you just basically go onto my TraderMaker indicator window that tells you where the market finds support, where it finds resistance, and what the sentiment is. Okay, what the sentiment is on all time frames. Okay, so we can see that the RSI across the board is neutral. However, the MACD on intraday is a sell, so is the stochastics. But on the MACD, it's buy for the higher time frames, but fairly neutral. So you've got a bit of a mixed bag there. But you can see on the smallest time frames here, it's neutral, sell, sell. So when the market gets back to the highs, you want to be selling resistance back into the range. Okay, so that's how you would use my particular TraderMaker Pro add-on to enhance your charts. Now this is just a quick example of what is happening and how you can use the indicators that I provide you with. There are whole different types of layouts. You can analyze the market on daily view, monthly view, and all other different time frames, or you can group them together. The whole point is, all the layouts are designed to give you an indication of what markets are currently correlating. So they're split into indices, commodities, dollar pairs, euro pairs, so you get all the right kind of information together. And then all you do is, when you want to open an individual chart, you do like this. You take the information from the time frames you look at, you zoom into a more manageable time frame, maybe your 10-minute charts or your hourly charts, and you pick out opportunities based upon what the different price frames are telling you. So again, the great thing about this system is it works on any time frame, it works on any product, and you get all this logical information as the market's set. You can interpret it however you want, but it's pretty clear when you see all lines of support marry up in the first instance. That's your key point on the downside. When resistance ties up, yeah, okay, then like here, these are your key resistance levels that are going to be tested and broken on the above point. So you can draw as many lines from this particular window as you want, but remember, the higher the time frame, the more relevant the level. So use your daily levels and your weekly levels and monthly levels that are key, that all tie up together, and then trade off your hourly chart, and you'll see where the market's going to move logically. Then the key thing is to look out for my bull and bear signals. So the bear signal here, okay, the market finds support on this fib line. Okay, so there's nothing we can do. The market can't break through, but as soon as you see a bull sentiment, the market then wants to move higher. Okay, starts to break the top end of fibs here, which you'll get an alert for, and Bollinger Bands, then again moves higher to the next Fibonacci level. So again, these are daily levels working on your hourly charts. So it gives you a much more structured way of entering the markets. And again, you can't deny that when we break through these levels, the next point it wants to test are the key support or fib levels. When it breaks, it goes to the next one. When it rejects, it works in the same way. Okay, so you've got your added bull bear sentiment of what the market time frame is thinking. You've got all your support and resistance levels, your sentiment of what the RSI and other oscillators are doing. And when you have specific Fibonacci occurrences, when we're breaking out of Bollinger Bands and going in one direction quickly, you get the Fibonacci levels. Okay, so there's a whole suite of indicators you can use on any product that suit any time frame you may want to trade. So all in all, a very powerful system.